Hello and welcome back to JodyFX. Today we're going to be going over range expansion, correction, and expansion buy and sell model. Really, we're going to be going over the sell model, but I feel like if you can understand the short aspect of this knowledge, you can easily flip it over and understand the alternative version of said model. I'm going to try to keep this as simple as possible. And again, understand that the simplified version of any of these concepts that I come up with are only to help you better understand where I'm coming from, as well as how to implement these or this trading style within your own trading plan. If you haven't already, hit that like button, subscribe to the channel because we do post or aim to post consistently. Ring that post notification bell. Definitely stay updated with all our videos. I'd like to reiterate, definitely subscribe because, I understand that a lot of people don't like hearing this, but it is free. And it only means that you can stay updated on all our latest videos. So basically what we're going to be going over is an expansion. Price provides our range, as well as providing our second expansion to continue or complete the overall. Basically what I'm trying to get you to understand is if you can see an impulse within any kind of market, price will give you any kind of consolidation. Understand that it's more than likely going to continue with the second expansion leg, whatever you want to call it. And it's really the same thing. We all know what we're here for, so I kind of don't necessarily need to go into detail over what you're pretty much seeing right here. So what I really want you to understand is within these consolidation, a lot of people, they see nothing. I don't mean nothing where like they obviously see the candles, but they can't make anything of them. They can't comprehend what's actually going on within the price action that is being presented to them, right? Why? Because really, nobody's really ever been taught to understand what's happening within these overall high to low range. And that's particularly what we're going to be talking about in this video. As you can see, price performs our descension in price, maybe off of any kind of other price action or concept, continues lower, and then enters in a bit of a consolidation. Understand that price is going to do what? Establish a strong high of some sort, continue lower, retest, create a weak high because of this high break the high before? No, it did not. That makes this high, this individual high, weak. A lot of the times price will retest or maybe even take out internal range liquidity, or maybe this is going to be a 3-candle formation, which happens to be what? Liquidity. Price will run that, what's seeming to be a liquidity grab, establish a weak low of some sorts, retest, take out internal range liquidity, whether that be that weak high, or maybe there's an imbalanced price action right here, or maybe there may be, I guess you could say, unmitigated wick that needed to be obviously rebalanced or made efficient, retest, and then again work its way down, taking out liquidity and continuing lower. That was for a brief explanation of what you are looking to, I guess you could say, look for within, these consolidations, right? So if we're going to go into a more, complex or advanced, understand that price is going to take out liquidity, establish our strong high, continue lower, maybe establish a weak low to continue to break lows, rally up higher, create what's seeming to be a weak high, retest maybe an unmitigated wick to the left, run internal range liquidity, whether that be a 3-candle formation, a weak high, or maybe just a pretty obvious breaker block that just seemed like it was good enough liquidity. Or maybe price sees an imbalance to the left that needs to be filled, runs that weak high, reacts pretty significantly, provides an imbalance, establishes another weak high, right? Because did this high break the high before or the high before that? No, it did not. Officially, we are below equilibrium or the fair value gap. At this point, price has all right to continue lower and overall continue its expansion towards the lows. Understand when you are able to point out the price range and overall understand what's actually happening and what you're obviously trying to comprehend, you can see that our range of a strong high has been obviously established, as well as a weak low. Price retest or retrace to take out what? Maybe internal range liquidity, maybe a fair value. Understand that gives you opportunity to re-enter or Really look to compound your return on investment over time, of course, whether that be on the hourly, on the 4 hourly, on the daily. It really just depends on your personality, your patience, your tolerance, or I should say risk tolerance, and your ability to overall react and adapt to what the market is presenting you. As you can see, as market takes out liquidity, a protected high is established, continue lower, price establishes another type of liquidity, runs it or raids it, establishes another weak high, or I'm sorry, wow, protected high, it continues lower to overall, lows. Now, I want you to be careful when actually looking for these ranges and trying to establish your overall strong high, weak low, or weak low, strong high, vice versa, of course. Because understand that what you're trading here is more than likely, not all the time, of course, because I mean, a lot of times it can just go, but more than likely you're trading a correction. What does it actually look like in retrospect, right? Impulse, correction, continue. That's a flag. Or, a lot of people would refer to that as a flag. Or maybe this pattern right here, that's a flag. The bearish variation. However, understand that just as quick as price can definitely continue lower to obviously continue this leg or the previous leg's momentum, price can definitely come back and take out the entire range as a whole. Say there was a type of liquidity and or imbalance that had just been left at any sort of time. Really, price needs to fill in. Price needs to take out what internal range liquidity. That gives price enough, I guess you could say, reason to obviously retrace, take out all internal range liquidity, whether that be the range itself, whether that be maybe a price imbalance, whether that be maybe just a tick, right? A tick, because if this is a strong high, this tick ends up being or acts as internal range liquidity, a structural low that hasn't been retested or liquidated takes that out and then continues. Whether that continues all the way down, whether that continues to maybe rebalance price within this, I guess you could say, fair value, and I'm sorry, not fair value, breaker block, rebalancing price simply. Maybe price, can just react, give a quick reaction and take out internal risk liquidity. What is that? It's SNR liquidity. Understand that these are, definite probable factors when we are looking to identify what's actually going on within these markets. Nothing is set in stone. Everything is, it's just based on probabilities. And I mean, a lot of people say, oh, well, that's gambling. Not necessarily, because when you think about it, the events that occur within the world are going to occur whether you are in the markets or not in the markets. And the markets definitely run off of a pre-programmed algorithm. So you can think of it as gambling, or you can understand that these are extremely calculated risks for minimum risk, maximum reward. And when you are patient, when you embrace the process as a whole, when you go through the many emotions, whether that be anxieties, depression, euphoria, excitement, understand that it is overall building your character, building your mind, building your mental fortitude to continue and reach higher heights as well. I mean, as far as, risk tolerance, your capital overall, as you grow, you're going to risk more. That's just how it goes. Or really, you should be risking more, because you don't trade to get your money back. You trade to compound, to a certain extent, whether you're putting one trade or two trades or maybe multiple trades, multiple positions. You're trading to multiply your income, not necessarily, or I should say you're investing to multiply your income, not necessarily get money back. So again, that's just a paradigm shift a lot of people need to obviously embrace. I hope you guys enjoyed this illustration. It was really just meant to be as simple as possible. This next part of the session or video, we're going to be going over live examples. These examples are obviously already printed. However, this is, again, think of it as hindsight testing, studying your craft, understanding where it is the markets are coming from on the daily basis. This is not even understanding my strategy or my way of thinking or looking at the charts. Understanding what's happening within the markets on a daily basis. And if you can understand that, well, you can develop pattern recognition over time, and you can anticipate these moves way before they happen, right? Because I can guarantee you there is somebody who obviously took this protected high. I can guarantee you somebody has taken this protected high, as well as this protected high, maybe even this one. I can guarantee you there is some lucky fool that said, fair value or 50 or price equilibrium, let me sell this short. Of course, it would have led to from either 100 pips to maybe 200 pips. Understand that he just got it on that exact time, and that was the result of him taking that risk, whether it be something he did on purpose or an accident. This is investing. You can make money on purpose. You can make money on accident. It's how it works. However, you can lose money just as fast. That's why it is important to implement a strategic, proven, profitable system that again is only learned over time. Nothing happens in a day, nothing happens in a night, nothing happens within a lot of times for most traders a year, 2 years, 3 years, 4 years. It's going to take that time. It's going to take that, like, you're going to have to go through the pain. Like this, like if you are looking to win a lot, if you're looking to feel like a winner, this is not the industry for you. You have to lose. You have to feel bad. You have to go through those many emotions that are very much draining at times. But you understand that, like, these understanding uncertainty and probabilities, it's not something that can be logically analyzed or logically broken down. Because again, it's like understanding the quote, God doesn't play dice with the universe, meaning what is going to happen is going to happen. However, when you understand probabilities, you can definitely understand that just because you put a trade doesn't mean, or just because you got stopped out doesn't mean the price was coming after you specifically. No, you have to have a sort of detachment from money in general to really be successful in these markets. Because of course it's not, of course, about the money. It's about your processes and, overall, at a certain extent, passion, because it's going to take that. You cannot physically or logically make sense of what you are learning, what's going on within these markets, what kind of strategy you're really looking to understand or comprehend. These are, you can't even logically understand the emotions that come with this business because they're not necessarily meant to be analyzed or studied to a certain extent. These emotions are meant to build what you already know, build your faith in what you already know, build your faith within yourself, within your system. The system's supposed to be like, a lot of people are looking to be traders long term as like as their number one. They're not trying to work a job, which I don't blame them. However, if you don't have trust in the process, it won't work for you. These emotions are meant to be felt. Let's get started. So we are basically going to be going over small ranges within these markets, so you can pretty much understand or comprehend how traders are able to catch moves or impulses like maybe this bullish rally as well as this bullish rally. These are all catchable. These are all very much, in a sense, available to all with the knowledge and obviously the experience to obviously take these and obviously look for and determine these entries as opportunities. Going over our first range, price seems to have established in a sense, a weak high. Because this high take out the high before it? No, that makes it weak. As you can see, we run a low of any kind of sort. I'm not going to be too crazy and look towards the left because this is a range, right? So it's kind of unnecessary. Establishes what's seeming to be a strong high, rallies up, performs a choke. So in this case, we have a liquidity grab as well as a choke. Price retests or retraces lower, takes out internal range liquidity, or in a sense, retests this unmitigated wick, continues higher, and overall, it definitely clears this overall. I'm not gonna say major high, but it is a high of a type. Of course, being a bearish rejection block, it is very much significant on maybe the 1 minute or maybe the 1 second or 30 second. What does price do? Obviously, after that, it retraces down, takes out internal range liquidity, which again, you could say it's definitely a trend line of some sort, right? Or you can understand that this strong low is liquidity within itself. This is a 3 candle formation, and I could definitely point that out. 1, 2, 3. Let's not make it too complicated. It's there, it's available. So the price could have definitely reacted to this 3 candle formation or maybe this trend line and really just used this unmitigated wick as liquidity. However, it decided that the bulk of the liquidity that was within this range was the overall lows. Price retraced, took out the lows, or 3 candle formation continues higher. Whether you entered right here, decided that that's going to be your stop loss, and where do we aim for a target? The next high, that's 5%. Moving on to our next range, price performs a weak high, continues to overall the high of the range, retesting maybe a rejection block. I'm not too sure. It really just depends on your level of experience within these markets. Price then provides a gap. This is a break of structure of any kind of sort. Continues to obviously hold a bullish trend towards the highs, took out internal risk liquidity, which happens to be this three candle formation, and continues lower. In turn, liquidating this, what seeming to be a slanted low, that is your entry. Again, strong high, weak low. The gap isn't necessarily too important. Yes, it is. It is of importance. However, understand that it's literally just a break of structure that didn't get printed. Just keep it as simple as possible, of course. Where are our targets? Well, first let's fix our stop below the overall range. Our target is definitely going to be, price definitely looks like it took out liquidity towards the left over here. I will use this unmitigated wick as liquidity. We will target, and yeah, less than 5%. But I mean, it really just depends on your risk, of course, and your faith within your overall trading strategy. I honestly aim to not necessarily settle for less than 5%, but this is obviously the 1 hour, so it's gonna take time. However, when you understand how to trade these ranges, you will understand the overall, rinse and repeat of your overall, like this cycle that you're looking to master to a certain extent, right? Moving on to our next strategy, we have a bit of a reversal, right? I hope this doesn't look too confusing. I'm just gonna see if I can break it down as simple as possible, right? So as you can see, we have a range. Price definitely manipulates out of that range, liquidates what seeming to be a trend line or liquidity grab, just performing a liquidity grab of these equal highs to a certain extent, establishing an overall strong high. As you can see, price fails. I mean, it definitely provided a choke, but it fails to break this overall high. It doesn't necessarily just come down. No, it stops. It provides or performs an overall failure swing, liquidating, this three candle formation or equal highs, or even, like I said in the example, maybe there's an imbalance that needed to be very much balanced or rebalanced in order to continue lower to obviously lower prices. Our first take profit is going to be this, these equal lows. Whether, I mean, depending on your level of experience, where your liquidity is or possible liquidity where, obviously lies. Fix your stop, fix your overall take profit. This is a 1 to 3, which I mean, it's decent, of course. It's very much decent. And obviously, when you learn to, read price or these candles, you can definitely learn that this rejection block is another form of a strong or protected high. This next rejection block is yet another form or sort or pretty much another protected high. It's a strong high, whether it be from here or this candle or this candle. Understand that these candles will not be broken. So obviously, when you get that experience, you can obviously reach for that level of risk and get your 5% on the day, or obviously if you prefer to swing, you can do that. Onto our next trading range. As you can see, price is coming from a pretty weak high, which I mean makes this high inherently strong because it's taking out or performing a liquidity grab. Price overall provides a choke as well as a tiny, and I mean tiny, break of structure. It definitely did not overall, break this high. However, it did go out of the trading range. So, I mean, it counts to a certain extent. And if you're willing to take the risk, I mean, you would definitely, see that return on investment. Price retraces or retests, taking out what? Internal risk liquidity. We have a three candle formation right here, as well as a fib level that we can definitely take advantage of, and or understand that this is in a sense a right shoulder if you really must. Like, we all know what this is, inverse head and shoulder. But if we're being more technical, it's taking out internal risk liquidity. maybe retesting a type of demand zone and continuing higher. Our obviously depending on your experience, we're going to definitely take this confirmation entry. You can definitely keep your stop below the overall low, but if you understand or have that experience to understand price action in general, you can definitely adjust and overall target this week low. I'm sorry, week high or three candle formation, however you want to depict it. That is 8%. That's amazing. It's an amazing trade, and it happened in 1 hour. I'm not gonna lie, 2 hours, but I mean, imagine that, and you're done for the day. Like it's amazing. Moving on to our next range, right? This is going to be a bit of a more complex range. This is going to definitely involve a fair value or equilibrium of price. Um, as you can see, price establishes our overall strong low, weak high. This is going to be more of a break of structure kind of trading range. This is not necessarily a failure swing. As you can see, price is rallying. At this point, we're breaking structure, breaking structure, breaking structure, continuing and holding overall protected lows. Price provides a gap, which is pretty much, I mean, obviously a break of structure that just wasn't printed. Price runs a three candle formation, which ends up being what liquidity continues lower, fails to break this low, which means what this low is weak. Price retests, takes out internal range liquidity, continues lower, not necessarily to continue lower, down to the lows, but to do what? Take out internal range liquidity. Because as soon as we take out, or I'm sorry, as soon as price's range is established, what are we going to do? What is price looking to do? We all know what the range cycle is by now. And if you haven't, I encourage you to definitely check out my earlier videos. As you can see, prices, I mean, if we're being honest, price is definitely filling in price inefficiency, maybe an imbalance within price. Another thing you can probably kind of depict from this price action is price is taking out what seems to be an inducement, right? Because as you can see, price didn't necessarily. It may have on maybe like the one, provided a tiny break of structure, but it didn't necessarily break. It wasn't pretty obvious at all. So it continued higher, which only means what? Well, if I go into the 4 hour, these two, I guess you could say legs, these two retracements are going to turn into one retracement. So instead of thinking that this is just maybe like a continuation pattern, understanding it's pretty much just providing an inducement to come back, and take out at that point, inducement rated to continue higher. I hope this makes sense. As well as overall retesting an unmitigated wick. Again, watch your stops. We definitely have, uh, hmm, we definitely have. No, yeah, I can't make sense of that one. Just go ahead and watch your stops, right? Because like I said, if you are, you can definitely enter right here. Your stop is below. I would say this rejection block to the left, but if you are very much experienced and understand that price is definitely going to do what it's going to do regardless of where I put my stop, you can observe I mean, really just observe what's happening in price. Price continues higher, continues lower, and provides an overall imbalance or price imbalance. Well, before this overall retracement lower or move down, before the overall move up, price gave us what? A unmitigated, I'm sorry, not unmitigated, a bullish rejection block. And that seems to be just as good as any kind of POI or demand zone, right? Where do we target? We target the high. That's a 1 to 6, dang there, right? Let me yeah, dang there, a 1 to 6, and that's an amazing trade. That's uh, a very much phenomenal trade that you should definitely be proud of, because if you are able to find opportunity within a market that's so chaotic, that's so uh, really just everywhere, you will understand that. I mean, at that point, it's mastery. At that point, you understand ranges, you understand internal range towards external range, you understand why certain things happen within price, and you can definitely adapt to what price is giving you, and these minuscule L's that you may be falling for, or these traps that you may be becoming victim to. They're just obstacles bricks, stepping stones to your overall goal, which is profitability, and understanding that this is compound interest. This is compounding your in a sense equity over time. Your wins have no choice but to outgrow your losses, and that's of course if you're using risk management correctly, of course if you are very much consistent, as well as not over trading, right? Not doing way more than is necessary to acquire profitability within these markets. Moving on to our next range, as you can see, price establishes a weak high, retests, and continues. At that point, liquidating the high to the left and establishing our overall strong high, and of course, mitigating this unmitigated wick to the left. Price continues lower, and with the wick, it definitely breaks this overall range or trading range. Retest takes out internal range liquidity, which happens to be this structural high, continues lower, actually fails to break the low that's previous. Price provides a failure swing. However, it didn't necessarily swing. Again, it's not that you're wrong or you just were looking at the wrong thing. No, no, no. Understand that price is going to do what it wants regardless of your knowledge. So you have to adapt. As you can see, when you look left, we have a bullish rejection block that very much acts as a supply zone. Price performs a liquidity grab. Really, wow, it did the same thing. Liquidity grab, break of structure. Obviously, we broke this structure on the left. I'm gonna go ahead and zoom in for y'all real quick, just so y'all can definitely understand. So yeah, we did break this overall structure to the left. Continue higher, establishing an overall pretty much a bullish block. I'm sorry, a bearish block. Bearish block. And liquidated that high to the left while definitely mitigating the strong high left of that, continuing lower. Um, and this is the thing about understanding the practicality of the markets. You can definitely take this confirmation entry as well as this confirmation entry, and obviously adjust your stops. You know where your overall strong highs lie, or you should. And if you don't, you need to gather that experience by taking your losses, by feeling that emotional or that uncomfortable feeling of taking a loss within these markets, and just understanding how price moves in general. You can definitely see how how lethal this concept, strategy, trading system can be, right? That's well over 18% within one, I guess you can say, impulse towards the lows. What do we target? Well, price definitely has a breaker block for us to definitely, look for or look to take profits. It's pretty simple. Moving on to our next range. As you can see, price establishes a weak high. Did this high take out any kind of high to the left? No, it did not. Yes, it took out this high, but I'm talking about major highs. And if it didn't, that means it's going to continue higher and take out that weak high. That weak high becomes what? A target. So if this is a weak high, price retraces, takes out liquidity, which happens to be what? Slanted low. Continues higher, establishing yet another weak high, liquidating that weak high, continuing lower, taking out what? Yet another slanted low. Again, notice how price established yet another weak high. We retrace, enter yet another consolidation, and we have yet another impulse or rally higher to take out that high. At this point, price retest or retrace, take out internal range liquidity, as well as taking out that overall low that was broken. As you can see, that establishes our strong low and overall weak high. Now I know what you're thinking, and the answer is definitely yes. Price continues, fails to break this overall high, leaving a what? In a sense, we're going to call it an equal high. Retest takes out internal range liquidity, which happens to be what? Yet another slanted low. So again, if you are thinking about it and if it's coming to mind, the answer is yes. You can definitely take every single one of these lows. And this is assuming you know where overall liquidity is. This is assuming you know where your protected lows are, and you know where, obviously your stop should be placed. If we look left, we definitely have in a sense, weak high, but we're going to call it a three counter formation because, of course, if we have a high and we have a low, you know, adjacent to it, we must have a low on the other side. These are the markets. These are ever changing, ever moving, right? Obviously not on the weekends, but even crypto definitely moves like this, as well as, moves 24/7. And we could establish, that high as an overall target, as well as the high before that. So we have two take profits, right? So maybe let two go to your first take profit and let the rest run. It's kind of self-explanatory. This is 10%, 10%, as well as 20%, right? So that's well over 40%, and this is on one range. Imagine the damage, and really just think about how lethal these overall momentum or the momentum of these markets can be, or these ranges can be, right? Because this was only a 70 pip range, led to well over. I mean, I'm not even gonna count the range itself. I'm gonna count this is well over 130 pips. That that yeah, like I said, it's crazy powerful when you understand and you can actually put these ideas, concepts, strategies into into work, into action, and take advantage of this overall manipulation that's happening or occurring regularly within these markets. Moving on to our next trading range. As you can see, analyzing this trading range, price performed or established an overall weak low, right? Did this low take out the low before, or the low before, or this low before? No, it didn't. So that means this low is weak. You can definitely draw that out for a future target, right? Because, like I said, weak lows and highs are definitely targets. Now that this weak low has been established, your job is to wait, right? Wait for overall this weak high to be overall targeted, as well as this week high to be overall targeted. As soon as price definitely provides a break of structure the absolute other way, that can definitely establish your overall weak low strong high. At this point, it's just about waiting and looking for your overall execution opportunities, right? So price provides a choke as well as a break of structure. Retest takes out internal range liquidity, which happens to be what, a trend line and or unmitigated wick. It's pretty simple. Price continues lower. As you can see, this looks crazy, right? It's not necessarily. As you can see, price is taking out internal range liquidity, maybe a slanted low, which is acts as another form of internal range liquidity, as well as an equal low that acts as yet another internal range liquidity, and then continues lower, right? We can definitely target this low right here, or you can look a bit beyond what's actually going on. We have a slanted low of any kind of sort, right? We can target that, as well as really we have what's seeming to be a liquidity void, right? So to an extent, you can definitely draw your fib and I don't know, maybe target the 50. And if not the 50, you can look below the 50, understand that this is definitely, or there is definitely internal range liquidity or a structural low that hadn't been mitigated already. And if you look below that, we definitely have a bullish rejection block, which acts as a demand zone for, any kind of retracement or reactivity. And like I said, if you are wondering, yes, you can take every single one of these entries. It just takes your overall concentration, focus, patience. Patience is a big thing, right? Definitely keep all of these above this supply zone. However, like I said, and you can gain the experience and the knowledge, and you can definitely take every single one of these trades, establish your take profits, whether that be the first week low, right? Whether that be the slanted low, or whether that you have the experience and or knowledge to hold all the way to your demand zone, and that's well over. And then compounding, this is like literally compounding interest. This is 3%, 9%, 14%. Wow, this is dang near 23% in less than I'd say a couple of days for real. And this is just understanding what's actually going on within these markets, and taking advantage of some pretty pretty crazy moves. Um, Moving on to our next trade or our next opportunity or our next trading range. As you can see, price takes out liquidity to the left, establishing what? An overall strong high. Price continues lower, fails to break the low before that, leading to what? It's liquidity. It's equal lows. Retest, providing a sort of liquidity of any kind, whether that be this price imbalance or inefficiency or this three candle formation, continues lower. Obviously, put your stops above the highs. This is a rejection block that's bearish. You could even use that one. You definitely know where to target. However, if you look left, you can definitely see that we have equal lows. That's a smooth, like that's that is the ideal target, right? As well as not necessarily you have equal lows. However, yes, this is a weak low. Did this low take out any low to the left? No, it did not. So it's definitely a target. However, for price to provide an equal low, it only gives you that much more confirmation to hold and obviously continue and aim for your 5%. Aim for your 5%. You've earned it, from the work that you've put in within, the years, the months, the early nights. I'm sorry, the long nights and early mornings. You understand how your trading journey has been. As you can see, price, retest, fails to break out of this, low, providing a what? Failure to break the low before, swinging higher, taking out what? Well, if you look closely, we have a rejection block that obviously stretches out to be a trend line, as well as internal range liquidity. As long as your high or stop loss is above that previous strong high, you more than likely should be fine. Uh, and yeah, that's a second entry. So that's 5 plus well over 7. So that's what, 12? 12% is it's decent. It's very much, I mean, don't get me wrong, it's very much something to be proud of, especially when you're early on trying to figure out, or not even early on, but you've been in this industry for a long time trying to figure out your overall concepts, strategies, your trading approach in general. This is, an accomplishment. A lot of people can't even, acquire 10%, and they've been doing this for years and years and years. I'm talking like 6+ years, and that's a problem. You know, that's something on the inside, because plenty of strategies and you're not profitable, or plenty of strategies and you're not at least pulling in any kind of percentage. Understand that's an inside job. That's something that you have to deal with within yourself. Balance your lifestyle. Take time for yourself. Really kind of introspect about how you are applying yourself to these markets, whether that be consistently, whether that be not enough, or too much, right? Because a lot of times too much of anything is very much it's unhealthy, and a bit toxic to a certain extent. Moving on to our next range, as you can see, price provides a I'm not gonna say weak high, we can say equal high, and retest fails to break this low before and continues higher to what, this weak high above that. Well, if you look closely, price definitely took out liquidity as well as breaking structure, and breaking structure again, that establishes our overall strong low. As soon as price performs a break of structure in the opposite direction of the overall trend, understand that that indicates a weak high, right? Yes, I understand that this is equal highs for sure, but also understand that this is a weak high, as well as this is going to be a weak high. And as you can see, this is a rejection block. This is a rejection block. These are all pretty much blocks for real. However, when it comes to this wick that's actually taking out the rejection block before it, that's a break of structure. It's a break of structure on the lower time frame. Maybe the 1 minute, maybe the 5 minute, maybe the 30 second. It's still a break of structure. It counts, So to a certain extent, price performed its liquidity grab, break of structure, and retest, right? So that's going to be our strong low, weak high. Price then takes out what? It's pretty simple at this point. It's an inducement, right? This is going to be a concept that we definitely talked about earlier on in the year. It's going to be a I'm sorry. It's going to be a continuation inducement, right? Price takes out internal range liquidity and continues higher. It's just that simple. Price definitely took out internal range liquidity, whether that be slanted, whether that be three candle formation, whether that be equals. Maybe that's even, in a sense, a demand zone being mitigated. It's a pretty decent entry. Yes, you can put your stop below this low. However, if you understand how structure works pretty much, and how structural lows can definitely be protected within a bullish market, you can see that obviously putting your low a bit tighter or putting your stop loss a bit tighter would definitely be something that is beneficial to your overall trading approach. As you can see, we don't necessarily have anything to the left to kind of refer to as like more of a POI or a target. So what I like to do in those cases is get the range before it. This is 135 pips. Okay, cool, cool, cool. Let me see what 135 pips looks like going on, to the next. We definitely have that available from, definitely the range, or I guess you can say your overall POI. But you can definitely do that from outside the range as well and see if you can definitely acquire that much more for your overall time invested within the markets. Moving on to our next trading range. Now this is going to be a lot bigger, right? This is like, in a sense, trading gold, or not even trading gold. It's a huge range. But when you understand your, overall the rules of each range or any kind of range for real, because again, this is a trading range. This is a trading range. This is, so when you understand that, you can understand why it's so not effortless, but not impossible to, catch these overall momentum shifts. At this point, price establishes an overall weak low, retest takes out liquidity, as well as, mitigating this overall bearish reject. That itself establishes an overall range of a weak low, strong high. Price continues lower. Before I continue, yes, you can definitely take. Maybe you said, okay, I'm gonna take the fair value gap of this rejection block. We're gonna put it above our strong high. Maybe this imbalance would work a bit better for me. Target that low. You can most definitely. And if you're really paying attention enough, what do we have below that? Price gives us an overall three candle formation to pretty much target. You can definitely target the wick if you really feel like it, but understand that it only heightens your risk to be overall broke even, right? Because imagine if you enter right here, or right here, you're definitely getting breaking even. So I would take it from maybe the confirmation candle, right? So what I mean by confirmation is this would be your direct entry for this overall breaker to the left. This would be your confirmation for an overall long entry, right? This would be your in a sense POI. Of course, I can go over direct entries as well as confirmation entries. Hit that like button. I would definitely throw a video out there for that as well. And definitely subscribe to the channel, because again, this material is exactly what you're looking for. This membership is exactly what you're looking for. If you haven't, by now come to that realization, give it a little bit and understand that before you even make that, commitment to me, make it the commitment to yourself, because it's not going to happen overnight. It's not going to happen, it's just not. It's going to take time. It's going to take time, whether, it's not necessarily dependent on, any kind of year. It's dependent on how intense your focus is and how willing you are, So again, you can definitely target that overall low. That's well over 5%. Amazing. As you can see, continuing this, a bit of an imbalanced price movement. Price fails to break this overall low, continues higher, fails to break that low. At that point, we have a failure swing. Price establishes a weak high. Did this high take out this high? No, it did not. Did this high take out even this structural high? No, it did not. Price uses this overall slanted low as liquidity continues higher. And like I said, this is offered dang near what, one, two, three, four. This is dang near like five opportunities within one range, and that's again understanding the practicality of the market. Yes, so we ended up running this week high, and what did we retest? Well, as you can see, price definitely has a or is definitely looking to associate with this demand area because again, this acts as liquidity. Why does it act as liquidity? Because if this is a strong high, this automatically it acts as internal range liquidity. It's the only obvious form of liquidity that's being printed or has been printed. Of course, this rejection block acts as liquidity as well, maybe even this breaker. However, after this strong high, what's the next form of liquidity? Unmitigated wick. It's pretty simple. It's not too hard to understand when you just kind of just throw away what you feel like you know and understand what's actually going on within these markets. Um, your stop loss above that structural high, you continue towards the lows. And in this case, you can definitely, feel good about targeting this overall um, three counter formation, you know, and that's well over 7% plus 5% and some change. That's dang near 13%. It's amazing. It's an amazing day. Yes, you had to be patient. Yes, you had to. It really just depends how disciplined you were, but maybe you took a few L's within this. You really shouldn't have, but you took a few L's within this range, maybe trying to get this high or low or however the case may be. Understand that your overall return on investment should definitely make up for any kind of petty or needless losses that you do come across within these markets. That's going to be our last range. If you did enjoy this video, again, please subscribe to the channel. It only means that you get to stay updated on all our latest videos, and as well as it just being, it's free, guys. This is very much the knowledge you are looking for, and a lot of people, you realize it, and it makes me happy because I honestly didn't think a lot of people would actually be paying attention, but it's a lot more people that than I did, anticipate, and it's very much. It can get overwhelming, but again, this is something that I love to do. This is something I'm passionate about. This is something that I really want to make a big part of my life. So again, definitely hit that subscribe button, like this video, and ring that post notification bell. Stay updated on all our videos. I do appreciate every one of you for hitting that subscribe button, hitting that like button, subscribing, or I'm sorry, supporting me to the fullest extent. I appreciate all the kind words down in the description below. I'm sorry, down in the comments below. It only motivates me to, continue to come back and put out quality content for the Forex industry. I'm looking to make a huge difference. This knowledge is for everyone. This knowledge is no longer hidden. This knowledge is for anyone willing to put in the work, and if you're willing to put in the work, that means you earned it, and that's just how I feel like, this should definitely be. We are entering a new age that, doesn't require too much to make money. People make money on Instagram, people make money YouTube, people make money sitting at home, using a phone. It's possible. With the correct knowledge, it's definitely possible. It's going to come with a huge ego death, right? Because you're going to go through years of it's going to hurt, it's going to feel uncomfortable, it's going to feel this, that, and a third, but it's going to be worth it when you understand why you went through all that at the end of your overall trading journey, which doesn't necessarily end at all, but again, it's like a completion, and then at that point, it's use your knowledge to obviously take advantage of these manipulations that happen so regularly within these markets. I am launching a subscription-based membership. If you are interested, the link to the waiting room is going to be down below in the description. I am offering two plans, a basic plan as well as a rogue plan. A lot of my attention will be going towards the rogue members. Not to say that I'm not going to obviously be helping the basic members. However, I am looking to build a relationship with a few specific people, and a long-lasting, maybe overall partnership, with people, and my energy is sacred to me. Like my energy, like my attention, where my attention goes, understand that I intend to, give nothing but, knowledge, the best of me. So, again, that's just, understanding who I am as a person and understanding how much I value my attention. So, I do recommend everyone, really everyone, to be a part of that Rogue membership, or I'm sorry, that Rogue membership plan, so you can have that access to me dang there 24/7. Of course, don't blow me up, but understand that I will definitely, like, this is something that I am passionate about and looking to do for a very long time, or continue to do, I should say. You want to be one of those people that are in that Rogue membership group chat, as well as the Zoom calls, as well as, and I'm talking on the daily basis, or at least as consistent as you possibly can, because you want to be. Those people are going to reach profitability. I will ensure it. However, I can only meet you halfway, and I will not spoon feed a soul. I would definitely not be calling you and making sure you're on these Zoom calls. Your commitment towards yourself will determine your profitability. And I have to say that because a lot of people, they say they want this, but it's your actions, not your words. Thank you guys for tuning in. I do appreciate the love and support. Until next time on Jody FX, y'all have a good night.